Hello, viewers, and welcome to this edition of Sensor 360 Investor video. So let's do a little catch up on the markets, and we'll also take a look at the sectors from a relative strength perspective to see what we're seeing in the markets and if we can find any corroborating data as to come up with a hypothesis. So let's start out with the big picture. This is the S&P 500 that we have here, and it's chart that I've shared before. So basically, it's a weekly look, and each bar represents 1 week's worth of action. So we can see that we've been in this uptrend and still strongly in this uptrend. We are experiencing a little bit of a pullback. And from our timing indicators in terms of velocity, we can see the long-term trend is still good, backed up by the price and volume action up here. On an intermediate term level basis, we are still in an uptrend, so we're still at a higher low here than this low down here, so that all looks good. And then on a very short-term perspective, just to try and catch those inner cycles, so we can see that we've dipped a little bit over this week or so, and so in the short term, so the short-term dip, so we're kind of a dip action going on, which may afford us opportunities to take advantage of. Now, what we need to do is keep an eye on these oscillators and also the longer term momentum trend down here. So far, in terms of intermediate and long term, and just on a price movement action, the markets still look bullish. And even though there's some short-term pain maybe going on just because of the pullback that we are experiencing. Okay, so now we'll change up the view and we'll take a look at the NASDAQ at the daily level. Okay, so here we have the broader NASDAQ. It's a slightly different look. It's the daily chart, so each bar represents 1 day's worth of action. And so here we can see that mostly we've been moving up in this channel to the upside. We bumped our head at the top of the channel, as we have done a few times along the way, when we've come down to the bottom of the channel and then bounced back up. So indeed, we seem to be making that journey towards the bottom end of this channel. It remains to be seen whether we then continue the programming, bounce off these levels and start to march upwards. A couple of things to note here are that on this bounce or bump against the upper trend channel here, it was notable that we saw quite a large distribution day, and so that's kind of just something to watch. And then as the market moves, then we get this candle here. Now, you also have to take into consideration that we have a gap. So there's a gap down that's just followed through down to the downside. So the actual candle, if you fill in that gap area, it is actually bigger than what you see because of the gap. So the true range of that candle is wider. So we've got definitely a distribution day there. We have another one here where it cuts through again, and both of those are higher above average volume. And then we can also see this intermediate term moving average gets sliced on both those days, and then subsequently turns down. And then before that, we can see a distribution day up here. So that was pretty meaningful. It was on higher volume, so a meaningful distribution day there. Then we can add to it these two, and from this position here, we can see that we tried to make a move back up, but petered away, couldn't hold it. So we had an attempt here, tried to push up for the day, but closed around maybe less than halfway up the candle, trying to make a push. And again, we have like a doji pattern now, so open and closes about the same. And then we had a slight gap up, which moved down and then finished up almost where it opened up, closing, open about the same, closing, open about the same. And over here we had a little close above the prior day, but it was pushed down. So not much appetite for buying here in this, and then followed by this big distribution day here, then followed by another distribution. Then we get the bending of the in this short-term intermediate moving average plus the shorter-term moving average, and then we have another attempt at to see what if we can test the metal moving up. Similar attempt about up here, and we can see got a little stalling type of action up here where it makes an inverted hammer. That may be called a hanging man or whatever it's called, and then followed by a big gap down, and then a follow through down to the downside, and then again a 3-day attempt here to try and move up. Then it met with more selling. So we've got a what looks like a kind of a structurally a weak setup here at the moment, and it could change because we're near the bottom of the trend channel now, so we'll have to watch for that. But to note, we have distribution day here, second one here, third one here, fourth one here, fifth one today, and that's in the most recent. So that's about in a 14 2-week period, and then further back we also have a distribution day over here, and that's about 25 days. So within a 25-day period, you've got 1, 2, 3, 4, 5, 6. So it's getting to the point where you want to be paying attention to market action and paying attention to any your trading positions and your sell positions, sell rules if you're holding stock at the moment. So the Nasdaq, the broader S&P 500 is kind of telling the long-term uptrend. It's all good. In the short term, we are getting some level of correction going on here, and now we have to wait to see what happens at this lower trend channel line. Also, we need to see what happens if the price breaks to the downside, and then a couple of things to watch out for. First, we'll see how far the breakdown is, and then if there's an attempt to rally back up to see if it can get back above the lower trend channel, or it gets pushed away and rejected, and then we can start to see what happens at the next level support, which will be about 15,779 area. So some work to look at here in terms of monitoring the market. Okay, so that's the S&P and that's the Nasdaq. So let's have a look at the sectors next, and we'll take a look at it from the perspective of relative strength against the broader market. That'll give us a little picture as to if there's any strength in the market, where it's at, and we can see any rotations and stuff like that. Okay, so here we are with the sector. So before we actually dive into the S&P/Y spider sectors, let's take a look at an ETF which shows us the top 50 stocks within the S&P 500 by market cap, obviously. And again, just to remind you that this is looking at the relative strength line. So if the line, this blue line, if it's moving up, that means that this issue is outperforming the market, then the market's measured as the S&P 500. If the line is moving down, then it means it's underperforming. And if it's flat, that means it's kind of on par with what the markets are doing. So we can see that in terms of the bigger caps, and so they were moving up. In fact, they were moving sideways through this period here. And then from about about mid-May, they started to outperform the broader market. So we got this little push up through to early-ish July, and then from about that point around July 10th, we've seen a move to the downside, which means the market caps, the larger market caps, have been starting to underperform. And remember, in the top 50, you're going to get a lot of tech stocks in there as well, the big trillion-dollar companies and the mega caps. Okay, so let's so that's telling us that broadly the the higher caps are not performing as well. So before I get to the sectors, let's just take a look at the Russell. So if the higher caps aren't performing well, one of the small caps do. And we can see about this time here, which happens to be at the same time, same day, July 9th and July 10th, the small caps started to outperform. So as we saw deterioration in the top 50 stocks in the S&P, or the top 50 stocks in the S&P, at the same time we saw the small caps take off, which is telling us that there was or has been on this, and we are experiencing rotation out of those big stocks into these smaller names. And maybe that's anticipating something, but that's what the market is showing us right now. Okay, so now let's have a look at what the sectors are doing, and we'll just go through them. Starting off with materials, and again, let's see what the marker down here is. That's the same date. So we're seeing a move into materials. So we're seeing move into small caps and a move into materials. At the same time, we're seeing money coming out of the larger caps. So that's kind of a defensive posture. And then this is a growth sector. And we can see that for this one in particular, it hasn't really done anything all year. It's just kind of been fairly flat. Now it's kind of starting to show some weakness. So we're starting to trend down, and it'll be interesting to see. I've got a couple of moving averages on this just to see, try and pick out a slower trend line and to see which way that's pointing. But certainly we're at a inflection point on XLC. So this one is not leading. Moving on. So we'll look at energy. And energy, we can also see overall it's been trending down with a couple of counter rallies. And over here, which happens to be the same time frame, we see money coming into the energy sectors as well. So that's both materials and energy showing some funds moving in. Let's keep going. XLF. XLF, well, most of the year has just been flat against the market, hasn't done anything, and then all of a sudden, again, same time frame, the financial sectors started to outperform as well. And so, to a large extent, materials, energy, and financial sectors are a little bit in cyclical, and they tend to start to show up late in late cycles as well. So just something to watch out for. It could just be because of the correction, but also what we want to watch out for is this indicative of something bigger. So that's why we have to watch it. At the moment, it's too early to read into that. So let's move on and take a look at the tech stocks sector, XLK. So here we have the same date. Money's coming out. So this corroborates the XLG and the rotation story. Makes sense. So let's see this further weakness in the days to come. So something to watch out for. So certainly technology is not leading right now. Let's keep moving. And if we go to a real defensive sector, consumer staples. So we see a pickup here. So there's been a little bit delayed in terms of money moving here. So we are seeing some rotation into this sector, although be it 4 or 5 days after energy, finance, and materials moved. So that's kind of supporting the hypothesis of rotation, but not as aggressively as the others. Let's continue. And utilities is also defensive and it's by nature. So again, if we pick the same date, we can see same story as the consumer staples, an uptick. Again, we have to monitor this to see if this is going to become something meaningful. Not enough data here to read too much into it yet. Overall, the trend is down, but we're getting a little counter trend, just like we got a little counter trend move here. Health sector typically has both components, defensive and aggressive, because it has biotechs. But here we can see a nice little move up. So definitely the defensive sectors are showing money. They're attracting money. So money is finding its way to safer havens. And then let's look at the last of the growth areas, consumer discretionary. And interestingly enough, this one was moving up since June. And then around July, a couple of days after the others topped out, started to come down. It's got a little bounce going on right now. So not 100% corroboration on the data. So a little, it's doing its own little thing. But so we'll have to keep an eye on this one to see which way this one breaks. So this, if anything, there's some hope for the optimists and the bullish argument, since at least one growth sector is still in play, albeit it's not the technology sector. So what does this tell us? It tells us that in the short term, there is some weakness and is definitely there in the growth sectors. There's some movement towards the defensive sectors, and a little bit of movement towards the cyclicals. And so, and definitely a move towards from the larger caps to the smaller caps. So that's what we're witnessing. And it looks like small caps are probably in the place to be at the moment in terms of finding opportunities. So let's have a look at RWJ, which is not the full 2000 Russell's stock. So this is kind of 600 small caps, which by definition have good sales. And we can see a nice bump up over here starting July 10th. So that's corroborating that right now in terms of big caps and small caps seem to be in favor in terms of growth versus defensive or value. Defensive slash value seems to be in favor. And we've also got some late cycle action because we're seeing financials, we're seeing materials, and we're seeing energy all making moves. So that's it for this video. And I hope you found it useful. So we'll take a look at some of the momentum stocks on another video. That's it for now. Thank you for watching. Thank you for listening. Goodbye for now.